All right, welcome everyone. I wanted to welcome Tim Ogilvie from Staked Ethereum Trust here today. Just for a little bit of precursor why we've been talking with Staked. This has been one of the highest volume of phone calls for Rocket Dollar customers. Many people are very experienced in crypto. Some people are newcomers to crypto, but staking has obviously been this big explosion in the crypto industry. We're going to get a little bit into that, and then Tim's going to be here to answer questions about staking, about Staked Ethereum Trust, what his company does, and how it services that space. So since this was such a huge demand, some hardcore crypto people know exactly how to stake. They know, there can be some significant steps to get this done. Some crypto companies know exactly how to stake, and they think, wow, this is a heavy load on us operationally to, work through all of this workload. So I started, a conversation with Sammy, who works in partnerships at Staked Ethereum Trust, and said, hey, I think we'd have a lot of investors that are really interested in your product. Some are hardcore crypto people. Some have, just done this for the first time. So Tim, I'd love if you'd introduce yourself and the company, and then we can kind of get into your content here.
Sure. So I'm Tim Ogilvie. Thanks, Brandon. I'm Tim Ogilvie. I'm the co-founder and CEO of Staked. Staked is about 3.5 years old. We are the largest partner to institutional investors who hold crypto and want to stake it. We support about 40 different proof of stake assets where we run the staking infrastructure, and I'll get into exactly what that means on behalf of some of the largest investors in crypto.
Awesome, Tim. All right. And the audience, feel free to throw stuff in chat and Q&A. I asked him beforehand what he'd like, and he said he's totally fine with questions as they pop up. I'm going to try and monitor the Q&A for Tim, and I'll try and interrupt when there's a good pause to bring up something interesting.
Cool. So maybe we'll get started. We'll talk a little bit about what staking is and how it works.
Sure.
So I think broad biggest theme I kind of hit is proof of stake is largely replacing proof of work as a security model. And so Bitcoin uses proof of work. It means that miners all across the world are racing to be the first one to solve a mathematical puzzle. And the person who solves that puzzle gets the right to create the next new block in the blockchain. And that comes with it both the fees for the transactions in the block, as well as some inflationary reward in new Bitcoin that gets created. And that works great for Bitcoin, but there are some drawbacks. And so proof of stake has emerged as really the security model of choice for everything outside of Bitcoin. It's got a bunch of better security metrics, meaning you can use less money to secure your funds safely. It's more energy efficient, and it allows for additional functionality. And so you've got out there, this number is not necessarily 100% up to date, but call it $600 to $800 billion in proof of stake assets out there. The largest ones you hear about: Ethereum, Cardano, Polkadot, a whole host of others. I think 5 out of the top 10 crypto assets are proof of stake.
Yeah.
And my prediction, which is a little controversial, is that Bitcoin's going to be the only proof of work asset in the top 20 left standing a couple of years from now. I think proof of stake is just going to take that over.
Yeah, and something for the Rocket Dollar, there's anyone newer that's watching this on YouTube or on the Zoom webinar here, is that when we talk about miners, sometimes this is really new to someone who's new to crypto, but a lot of these miners, you hear about them buying very expensive computers. Individuals used to do this, and now institutions will put together tons of different computers. Those computers really help this network run. So they help someone get a Bitcoin from one person to the other. That's why all these computers are churning constantly. With proof of stake, it's trying to help make sure these computers are working for a lot of different needs and uses. And that's why Tim is saying, hey, this might be a future winner down the line, pushing this mining and this computing power towards some other applications.
And so in a proof of stake system, there are rewards that are actually available rather than miners competing. The people who own the currency itself or the stake get the opportunity to lock up their stake and vote for what I've called a staking agent here, which is someone who's running the infrastructure that creates the next new block. And so if you own 10% of Ethereum, you got a lot of money, but you also have the right to create 10% of the new blocks in Ethereum. And so that's what Stake does as a business. We generally act as a staking agent, running the infrastructure on behalf of larger holders who point to our infrastructure and rely on us to securely and reliably create new blocks. We are broadly Staked is the largest staking agent for institutional holders of crypto. We've got a bunch of funds up here. So folks like Pantera, Three Arrows, DCG, Multicoin, Arrington Capital. We also work with 5 of the top 10 global exchanges and a number of the largest custodians in the category. So we do this at scale across about $5 to $6 billion in assets for 40 different proof of stake assets. And like my broad thinking about where this belongs in a typical investment portfolio is I think that you've got this like historical 60-40 portfolio where you got 40% in fixed income, 60% in equities. I think that's crazy. If you look at buying bonds in government currencies, there's $120 trillion out there really at really low to negative rates. And the underlying currencies themselves are highly inflationary. We've created more dollars this year than at any point in history. Crypto offers a cool alternative to that. You've got hundreds of billions of dollars and it's growing very quickly. Yields are anywhere between 5 and 10% on crypto assets. The underlying monetary supply is very sound. It's fixed. And I think in the case of Ethereum, Ethereum's going to actually end up being deflationary in that the currency that gets created to reward stakers is actually going to get eclipsed by the amount that gets burnt. And we'll get into what that means. And actually from the usage of Ethereum. So I think of that as kind of where crypto lies in the portfolio.
Great. And, something that I brought up for Rocket Dollar investors is we have so many investors that think in yield-based. Maybe they're a real estate investor, or they're coming from just another investment where the investment issuer always gives them a yield. They're like, okay, this is about the yield I can expect. Something that crypto hasn't had, this is bringing more yield-based type of, gains and investments for crypto investors. So a lot of people are coming from the real estate mindset saying, hey, I didn't really understand crypto before, but seeing that I can get a yield off of it, that makes it easier for me to hold long-term. That makes it easier for the buy into the network and the ecosystem. And it really opens up a whole level of opportunity.
Yep. So generally, our partners are large holders of crypto who hold it directly. And so to work with Staked, you generally have to go through 3 steps. You've got to buy crypto, you've got to custody crypto, and then you've got to stake that crypto. With our Rocket Dollar partnership, Rocket Dollar is offering access to what's the Staked ETH Trust. And Staked ETH Trust wraps all of that up into a single investment vehicle that purchases crypto, it custodies the crypto, and it stakes the crypto so that you get the combination of exposure to the Ethereum price as well as yield denominated in crypto that's roughly 6.5% annually in terms of new Ethereum that gets created. And Staked has gone out and hired best-in-class partners. We know all of the sort of best folks in crypto. We work with Fireblocks on custody. We work with Ethereum and Securitize on fund administration and investor onboarding, all of which is integrated with Rocket Dollar. So it's super seamless process. And so the core of that is then you can get easy exposure to ETH plus staking without necessarily going out and going through all the hoops of purchasing, custodying it, and staking it directly.
Yeah, and something for a Rocket Dollar customer to try and do this, if they open a Rocket Dollar account, they're typically going to need our LLC account. And that they got to get the Rocket Dollar account created. That'll take a couple weeks. Then they might have to go get an exchange account and then go into some staking service. So, the hardest core crypto people are sometimes willing to jump through those hoops. But even then, sometimes they're telling me, look, this is a really long process. I'm looking for something simpler. I have money right now. I see a price I want to enter in. How can I enter this as quickly as possible? So, the Staked ETH Trust does skip a lot of those steps. And Staked as a company might honestly already work with some people that you're exploring on the back end or as an institutional partner. So this is an investment offering that helps really cut to the chase for that access.
So I saw a question in the Q&A and the question is your yield tokenized and is Staked a DAO? And the answer is no. This is not a token. These are shares of stock. So the trust is a Delaware trust, which is a trust vehicle where investors have titled interest in a share of an underlying pool. So if the pool had 100,000 ETH in it and your shares represented 1,000 ETH, you own 1% of that pool. So it looks much more like traditional stocks, but its underlying NAV is dictated by the Ethereum that's held. The only thing the trust can do is buy ETH and stake it. It doesn't actively do anything outside of that. So that's how it works structure-wise. And so I think we talked about this, but the core of this is you get exposure to two things. Number one, exposure to the price of Ethereum. I think is the largest smart contract-based platform out there. You are seeing just accelerating use in terms of the Ethereum network, decentralized exchanges, DeFi-based lending, all the activity in NFTs. The vast majority of this activity is happening on Ethereum. And anytime you do something on Ethereum, each little transaction takes a small amount of gas. And so that is a small amount of Ethereum that you have to pay to facilitate the transaction. All of that's been accelerating, and a portion of that actually goes and purchases ETH supply and buys down the currency, and it burns it. So what happens is you have what looks more like a share buyback on Ethereum, where the activity that's happening in DeFi and NFTs is driving real cash flow in terms of fees that is reducing the overall supply of Ethereum. On top of that, you have a participation in ETH 2.0, which is Ethereum started as a proof of work system and is moving to proof of stake through a multi-step process. And so the Staked ETH Trust offers exposure to both those things.
And I watched a podcast recently that I thought, they were talking to someone really experienced in ETH that was trying to really make it easy to understand. They kind of talked about it like, look, if Bitcoin is a digital gold, people are thinking about it as kind of like a digital gold. Ethereum is almost like an Amazon Web Service, and you pay a little bit to make use of all of this computing power and ability. It's very gross oversimplification, but helps people wrap around their head at the start of the idea. And, you can look at, there were some partners earlier that, you can look at the recording and look back to, but a place like Consensus, some of these partners, they're trying to make sure to foster more companies, more applications using the network. You hear, like, Tim just mentioned NFTs. Those are all exactly powered by that gas. So more of these companies using it, the more people want to be participating in the Ethereum blockchain network.
So we got another question on structure. What's the advantage of using this trust versus buying into ETH directly? There are a couple. The first advantage is that you are able to participate in, it's a much easier mechanism for getting exposure to Ethereum. So rather than purchasing, custodying, and staking directly, it's all wrapped up into one vehicle. The second is it is a more fungible vehicle than ETH2. As you can see here, there is a multi-phase approach. Right now, if you bought ETH and you wanted to stake it, you lock it up to some indeterminate time when ETH is fully finished with its conversion to proof of stake. With the ETH Trust, you hold shares of stock, which can be sold within the first year to another accredited investor, and after a year can be sold to any investor. So there's faster liquidity on the stock itself. And the third potential advantage, which isn't guaranteed, but Staked will pursue what's known as a public market uplisting on the OTCQX markets for the shares after a year's holding period. And that it has historically has traded at a premium to the net asset value or the underlying NAV. Whether that happens or not, entirely unclear, but those are really one of the three reasons people look at the trust as an investment vehicle versus purchasing ETH directly. I think the last one that I'd add on is, a challenge with staking ETH is that you can stake in increments of 32 ETH, and so that generally means about $100,000, and the ETH Trust is more flexible with investment amounts. We have a $25,000 minimum, but then you can be as flexible with your allocations as you'd like.
Yeah, and that process that Tim talked about, just getting in and buying the trust, Rocket Dollar customers do this. They go use like a staking service to go stake out Ethereum. The problem is though, there's a couple, like I mentioned earlier, there's a couple weeks involved. It can be at least 3 weeks of work, and that's usually kind of best case because you've got to work with usually 2 organizations. You got to acquire crypto, then you got to send it to a staker. Then you have to make sure those applications are done for both of those service providers. And when crypto is flying up, or when the price is moving, a lot of action, a lot of those crypto providers get jammed up, and customers complain to me, hey, I haven't got my application approved in 6-8 weeks. When is it going to be done? I have to tell them, sorry, they're too busy right
now. Okay, so we got some other questions. Do share owners of the trust have any voting rights, influence in block validation, or MEV mitigation? Okay, so there's a bunch there. The first is that Ethereum generally does not use on-chain governance or voting at all. And so there are really no governance rights associated with proof of stake consensus. As it relates to MEV, which is probably a topic that's a little too complex for today's webinar. It stands for minor extractable value or maximal extractable value. What that means is it is the financial return that a staker can earn because their position as the creator of the next new block in the blockchain is a strategic one, as they determine who effectively can perform certain activities or who can't. And so Staked will participate, and we're very active in understanding MEV and participating in it. And so people who stake with us will get the benefit of higher yields due to that. We are compensated as a pretty typical fund manager, in that we've got a 1% on the funds, and we actually take a percentage of the staking rewards as well. I think as it relates to sort of comparable services, you're probably going to be right in line with doing this directly when you're paying a custodian and a staking service like ours.
And there was one more in the chat. He didn't get it into the Q&A, but burn gas, so before the gas is burned, is it used to purchase ETH, and what is that paid to the stakers? Is that the correct way to view burn gas? I think he's asking for just more clarity what burn gas is.
Yeah, so almost. So unfortunately, this is a little complicated. There are actually 2 fees that get paid in when you make a transaction on Ethereum now. One of them is called the base fee, which gets burned. And so it does not get paid to the stakers. The currency is just, you can imagine it like they take $100 and they light it on fire. It is burned, it's forever destroyed, and the currency goes down by that small amount of the fee that just got paid. There is also some incremental fees that will be paid to stakers. And so that adds to the yields that are available on the Ethereum network. So as transaction volume increases, the stakers get a small portion of the transaction volume as well. Well, I think a lot of investors who, it sounds like there's a lot of yield hungry investors out there, they will understand this, but Grayscale has a similar product out there, and it's really worth thinking about how significant these staking yields can be in terms of the underlying ETH balance. So we looked at, if you put 100 ETH into the staked ETH Trust, or you put 100 ETH into Grayscale's Ethereum Trust, which is one of the larger trusts out there that offers ETH exposure. Over 5 years, you're going to have 42% more ETH at the end of that time. So 142 ETH in the staked ETH Trust, and I think about 88 or 90 ETH with the Grayscale Trust. So really material advantage in terms of doing that. So irrespective of how you're thinking about getting crypto exposure, if you hold a proof of stake asset, you really want to make sure you stake it, because you lose ground continuously versus people who are staking it often. That's kind of broad strokes. I mean, I think we've got some key facts laid out here just in terms of how it operates, and happy to answer more questions. But, I think the core of this is get the opportunity to get both ETH exposure plus a staking yield. Staked is a leading player around staking, delivering the highest yield securely and reliably. And we've partnered with a bunch of best-in-class providers to help make this kind of an all-in-one easy solution for it.
Yeah, and it is a constant question, but people ask, hey, I'm accredited, or if someone is non-accredited, is there any way that they can interact with Stake? Honestly, they might already, if they're already interested in staking, work with one of your partners in some fashion.
Yeah, so generally, this is a product that's only available to accredited investors. That we work with exchanges where we run all the staking behind the scenes. We work with other vehicles that are better suited for non-accredited investors. But this specifically, the SEC will not let us sell to anybody except accredited investors.
Yeah, and something Sammy told me, when we first started talking is just, look, staking is complex operationally to pull this all off. Sometimes an organization is just like, thinking about all that operational capacity that they have to add just to get that done. Instead, they can call up Tim's company, talk to Tim and Sammy, get that onboarded with their exchange, and get that pipe works and all the magic that you guys do behind the scenes to roll out staking or some of that service too, some type of crypto services. Okay.
All right. There's a bunch of questions. One of them was, it's actually come in two different directions, but the same question, which is, we support 40 different crypto assets for our largest investors. Are we going to run trusts for the others? We intend to. Right now, the Staked Ethereum Trust is the only one we offer, but I wouldn't, without giving anything away, I wouldn't be surprised to see a Polkadot Trust or a Cardano Trust in the near future. How are staking yields in the trust treated from a tax perspective, more like stock or more like crypto assets? Okay, so answer number one is, I'm not a tax attorney and everybody's situation is different. So I can tell you sort of personal opinion and what I hear from other people, but this really always comes down to an individual question. My core belief, most of our clients, are that when you generate income inside the United States, it is taxable income, which you're recognizing at the price at which you are receiving the staking rewards. And that's how most of our folks treat that. I think Rocket Dollar, part of the reason you're working with someone like Rocket Dollar is it is a tax advantaged approach in many cases. And so, you'll have to figure out how that is applicable to you. But, if I were earning this directly, it's taxable income.
Yeah, and there has been some recent movements lately. There's a congressional blockchain caucus now, because a lot of crypto taxation is currently coming under review. And it seems like there's finally some more developments on how the IRS is treating all these different areas of crypto taxes. Staking is one that's taxed, as ordinary income. And obviously visit your tax advisor, especially if you're using DeFi products and staking and a bunch of different stuff. We have some previous webinars on that. But in the retirement account, what you're really doing is shielding that. If you're doing that in a traditional IRA or a Roth IRA, you're letting that grow. In a traditional IRA, then comes out as ordinary income. If you're putting that in a Roth IRA, as long as you're keeping the gains in there for 5 years, or until retirement, that's coming out tax-free. So a lot of our crypto investors love the Roth IRA. A lot of them are looking at crypto tax enforcement, getting frustrated after filing the last tax bill. So they're considering, trying to get more crypto exposure for their account and kind of thinking, hey, what type of crypto do I want to do in my account? What really works on this long-term idea? Staking is a pretty good one just because of the yield-based investment is really attractive to a retirement person looking very long-term to hold the asset. Okay. You show a 1% management fee. Can you elaborate anything on that, Tim?
Can I elaborate anything on that? Well, if you put $100 in, we take a fee of $1 annually. I believe we take it monthly. And so that is how we get paid.
Okay. Yeah. And
it's denominated in ETH, to be clear.
Yeah. And so with fees that you can expect, just so you know, asking the question, what if you go elsewhere? You're going to have fees when you purchase crypto. You're going to have potentially on a staking or lending platform, they might give you some type of interest. They're probably taking some type of cut of that. I do not know. I'm just kind of getting into that space myself, but you can expect fees for purchasing the crypto, maybe moving the crypto from one wallet to another. And then also you will get interest from wherever you put that interest provider could potentially take a cut of that yield that you're getting for your crypto that you're staking.
Yeah, and relative to other options, this is a very competitive option.
So, and then obviously said, Ethereum is, your main flagship product. When you're working with other partners, Tim, what are you typically helping them with when they approach you? I'm just curious. I was curious when I first asked Sammy, when a partner comes to you, what kind of services are you providing for them? I thought that was really interesting. And also the audience would find that interesting.
Yeah, so I think, one role we play is education. We deeply understand how the crypto asset works, how yields are generated, and probably most importantly, how to get the highest yield for our client. And so that's a big part of exploration that we do, is understand that by working with typically the teams at the various token projects. So we educate our clients and we provide a bunch of that information on our website. There's a yields tab that provides a bunch of information. And if you go even further onto a specific asset, we provide guides that have information about how does staking work and things like that.
Yeah, and something like if an amateur comes and they try and work with no organizations, with Ethereum, is that the 32 number? What's the number that you need before you can start staking on your own, really?
Yeah, so you need 32 ETH to stake on your own. As a practical matter, stakes business is really in servicing institutional clients. So for us, we work with clients and can afford to sort of put a lot of hand-holding against clients who've got 3,200 ETH, for example, versus $100,000. So the trust makes it a whole lot easier because we handle a lot of the details, or we've hired best-in-class partners to do that.
Yeah, and some thought that I just had is, some people like, well, why can't I just do it myself? Honestly, just, whether it's a retirement
Sure.
investor or personally, a lot of people look at 32 ETH and they look at the price and they go, wow, that is a lot of money. So sometimes using a staking service allows you to have a much lower level of coin. And then a service like Staked Ethereum Trust allows you to not worry about that, 32 ETH limit. Which is frankly, even some affluent customers, that's just a lot of ETH to be holding at one time.
Yep. Yeah, and I think, look, can you do this yourself? You absolutely can do this yourself. It's just a bunch of work, and there's a bunch of complications that a lot of clients have told us they would prefer a more turnkey product.
Yeah, and that's been a constant. There's a few investors I've noticed who, they will fight through any objective to do something themselves. And some people say like, well, why am I paying a 1% fee, blah, 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 this. Frankly, a lot of it is just time. Your time is valuable. You have a day job. A money manager fee to basically accelerate that process, get you exposure to that asset, take things off your plate that you don't need to be dealing with. Let's see, one more Q&A here.
So there's a question about, do we do straight staking or do we also do yield farming? We are really straight staking. So we do not, we're not participating in things like yield farming. Are there security advantages to using this trust? Well, yes, I think there are pretty material ones. I mean, if you are doing this yourself, you are responsible for self-custody or finding a custody provider. And so Staked works with Fireblocks, who uses multi-party computation to secure the keys so that the keys are never actually fully reconstituted. And so nobody's got a key they can steal. And so we work with best-in-class partners so you don't have to figure this out on your own.
Yeah, and part of that, just dealing with all these crypto partners from my experience as, I onboard crypto partners and I work with them, there's just a certain level of scale, where doors open up to you. As a smaller investor, you really have to tramp through all of those, open them all yourself. With a big institution, they have access to the security, the custody partnerships that can really run a high level product like that. All right, and so someone asked, is there insurance with the product with any disaster scenarios or key mismanagement?
So there's not insurance attached to the product itself. We've explored that, have not yet put a policy in place. I think just by way of background, Staked has a very profitable business and material assets on the balance sheet. So to the extent we made a mistake and lost funds, we would evaluate it on a case-by-case basis, but have the ability to make investors whole on things like that.
Yeah, of course, crypto security is always a top question any webinar we do.
Should be, yeah.
All right. Feel free to fly the questions here. I'll think of anything else to ask Tim here, but feel free to fly any more. And I'm trying to think when the surge really first started. How has the growth in your business been, Tim? I assume it's been insane just from the Rocket Dog customers calling me. I can hear the customer demand verbally increase by day, month by month.
Yeah, well, our business has grown like a weed. It's been great. I think we've seen a ton of activity, and I think there's a growing understanding in both retail investors and institutional investors that the yield opportunity in crypto is very significant. And so that's been fun. That's been great.
Mm-hmm. Okay.
In terms of key risks, there is no rehypothecation. I mean, I think there are services like a BlockFi or a Celsius where you give them your assets and you don't really know what's going on behind the curtain. They're reputable companies and I like what they do, but you don't know where your assets are going. Sometimes they're rehypothecated. Sometimes they're going into lending. Sometimes they're going into arbitrage. Sometimes they're going into staking. The Staked ETH Trust is a trust product that does one thing and one thing only. It holds ETH and it stakes ETH. And so the risks around that are relative to staking, where there is some what's known as slashing risk associated with if staked does our job incorrectly. But those are very different than sort of rehypothecation and people taking materially different risks with your assets than you really signed up for.
Mm-hmm. Michael had a question. Any protection against ETH in permanent loss?
So the term impermanent loss, I always associate with putting assets into like two-part pools on Uniswap or another DEX. And so no, there is no impermanent loss because you're holding ETH. I mean, you are taking, to be clear, you are getting ETH price exposure, right? So if the price of ETH goes up, your price goes up. If it doesn't, if it goes down, the value of your asset goes down. But there's no concept of an impermanent loss because you've taken a little bit of exposure to a stable coin or something. And there's a question about, do we offer a pooled staking service for folks who already own ETH directly? We run ETH staking services for people who have 32 ETH or more. But we do not pool assets, and that's really because the SEC frowns on pooling of assets in general. And so Staked is we're a white hat player inside the United States, and so we're not able to pool assets.
Yeah, and something I mentioned to crypto investors is, look, if you're handing over your crypto to anyone, or obviously with any financial product or money, but especially when you're handing crypto coins over to someone, whether it's DeFi or it's more centralized experience, it's always very informative to understand where's the crypto going and who's using it in the meantime that it's there. That really educates you on, how the company is running operations, what they're doing with it. And, even like Tim said, like I use Celsius personally, knowing at least what's going on with the crypto while it's out of your wallet really assists you in understanding the risks and understanding the benefits of, who is this helping? If I like the companies they're helping, maybe I really enjoy putting my crypto there. If I don't really understand and I really don't like some of the people where the crypto is going in the meantime, maybe I should consider using another service. All right. All right. So Tim, any kind of last comments or anything? Again, probably last call on questions right here, but feel free to pop any more if there are any more out there.
No, I don't think so. I think, our contact information is here and we can follow up, or you can follow up directly with Brendan. This was great. No, a bunch of educated questions and people who clearly know their crypto.
Okay. Yeah, we got a really hardcore audience, and some people ask, like, Brendan, where do you get your crypto news? Frankly, I don't read any, which sounds bad. I listen to smart people talk at me all day about it. And I just say, hey, what's going on? What's this new DeFi or whatever? What's going on with staking? And a lot of our smart customers really educate me. And I find them a really good education source every day. So if you would ever like to get started or interested, you can feel free to email Sammy at stake.us at his email. We've had investor go through, and we're just obviously continuing to make this as integrated and as quickly as possible for someone to get onboarded into the Staked Ethereum Trust. As far as a Rocket IRA, if you're checking this out on Zoom now or on a YouTube, we're going to put this recording up on YouTube. We serve a variety of different crypto products. We have very hardcore crypto customers to new crypto customers. You can check out a Rocket IRA or a solo 401k if you're self-employed at rocketdollar.com. I'm happy to talk over retirement-wise what makes sense for you. And really, the final point in crypto we didn't talk about too much is this is saving you from paying taxes in your account, whether that's pre-tax or post-tax Roth. And that's really exciting for quite a few crypto investors. So thank you, Tim, for joining us today. This will be on YouTube. Feel free to share it. Thanks for stopping by.
Great. Thanks so much, guys. Bye.
All right. Thank you, everyone. Have a great day.